Wall Street just logged its fourth straight up day heading into Thanksgiving, with tech back in the driver's seat and Robinhood ripping double digits on a bold new move into prediction markets. This is Market Close Daily for Wednesday, November 26th, 2025. Let's break down what actually mattered after the bell. Welcome back to Market Close Daily, after the bell, before tomorrow. Every episode, we walk through the major index moves, key earnings and macro stories, sector rotation, smart money themes, and a focused watch list for both traders and long-term investors. All of today's numbers are based on official market close data from Wednesday, November 26th, and have been double-checked against multiple sources before we hit record. Closing snapshot. U.S. stocks extended their winning streak to a fourth session. The S&P 500 rose about 0.7% to close near 6,812. The Dow Jones Industrial Average added roughly 315 points, also up about 0.7%, finishing around 47,427. The Nasdaq Composite gained roughly 0.8% to about 23,214, and the Russell 2000 Small Cap Index climbed about 0.8% to roughly 2,486. That puts the S&P up just over 3% for the week so far, and nearly 16% year-to-date, with the Nasdaq up about 20% year-to-date. It's been a powerful rebound run into the holiday, driven largely by tech strength and renewed confidence that the Fed will cut rates again in December. Macro and the Fed. Today's move was still very much about the Federal Reserve. Mixed economic data and a cooling job market have pushed traders to price in roughly an 80+% chance of another rate cut at the Fed's December meeting. Hopes for that cut have been a key driver of this week's rally, helping stocks recover earlier losses from November. At the same time, central bankers in Europe are sounding the alarm about stretched U.S. tech valuations. The European Central Bank's latest financial stability review specifically called out FOMO-driven enthusiasm around AI, warning that U.S. tech names like Nvidia, Alphabet, Microsoft, and Meta may not fully reflect macro risks if the AI rollout disappoints. They stop short of calling it a bubble, but the message is clear. Policymakers see risk in how aggressively investors are crowding into the AI story. For you as a trader or investor, that mix, a Fed that's likely to cut again, plus rising concern about stretched AI valuations and U.S. debt, means this is a market that can climb, but also one that can correct quickly if the narrative shifts. AI, TECH, and GROWTH. Tech led the tape again today. Heavyweights like Nvidia, Microsoft, and Broadcom all posted solid gains and were among the biggest contributors to the S&P's move higher. The theme is still AI and cloud. Spending hasn't slowed the way some bears hoped, and the market is rewarding names that sit at the center of compute and infrastructure. But it wasn't just the mega caps. Dell Technologies popped as investors continued to lean into hardware and server plays tied to AI data centers, and a number of software and platform names rode the broader tech tailwind. Underneath the surface, you can see a clear pattern. Money continues to favor proven, cash-generating AI leaders while remaining more skeptical of speculative, unprofitable growth. Sector Roundup. Sector-wise, technology and communication services led the advance, followed by financials. Robinhood's double-digit jump gave a visible boost to the financial space, and banks benefited from a slightly lower 10-year yield, which eased to just under 4%, even as the 2-year held around the mid-3% range. Consumer names also had a strong showing. Retailers like Urban Outfitters and Petco ripped higher on upbeat earnings, adding to the sense that at least parts of the U.S. consumer are still willing to spend heading into the holidays. That matters heading into Black Friday and the core of the retail season. On the flip side, not every sector joined the party. Deere slid sharply after issuing a downbeat forecast, underscoring pressure in agriculture and capital spending tied to farming. Energy was more subdued, with oil still wrestling with concerns around global growth and supply. Gold remains elevated near record territory as a hedge against policy and geopolitical risk, even as equities climb. S&P 500 gainers and losers. Inside the S&P 500, the single biggest gainer was Robinhood. The stock surged nearly 11% after the company announced plans to expand its prediction markets business with a new exchange, a move that markets read as an aggressive push to tap into speculative trading demand. Urban Outfitters and Petco both jumped in the mid-teens percentage range after delivering stronger than expected earnings, sending a positive signal for parts of retail. Dell, Broadcom, Microsoft, and Nvidia all added solid, though more modest gains that helped lift the indexes. On the losers' side, Deere stood out with a drop of around 5 to 6% after its guidance underwhelmed, and management flagged headwinds for equipment demand. A few individual names in more defensive or rate-sensitive pockets lagged as investors opted to ride the higher beta tech and consumer trade into the holiday, but there was no broad, catastrophic weakness in any single sector. Smart money and big moves. One of the more important under-the-radar stories is how institutional money is treating this latest tech surge. The ECB's warning about stretched AI valuations is a reflection of what many portfolio managers already feel. Fundamentals are strong, but expectations are extremely high. That's prompting some funds to trim the most crowded winners, especially in mega-cap AI, while reallocating into quality cyclicals, utilities, and infrastructure plays that benefit indirectly from AI and reshoring, without relying on perfection in the narrative. We're also seeing continued interest in platforms that sit on top of AI infrastructure, rather than just the chipmakers themselves. That includes software, cloud, and data center REITs, plus regulated utilities and energy infrastructure that power the build-out. Smart money isn't abandoning AI. It's broadening where and how it expresses that theme. Deeper cuts and names to watch. For traders, Robinhood is front and center. A nearly 11% move on a single day off the back of a clear catalyst, its plan to expand prediction markets with a new exchange, is exactly the kind of action short-term traders look for. The key now is how it behaves around today's highs, and whether volume stays elevated after the news spike. If the stock consolidates just below or slightly above today's range on strong volume, you could see continuation into the end of the week. If it quickly gives back a big chunk of today's gains on light liquidity during the holiday, that would signal more of a one-day squeeze than a sustainable trend. For long-term investors, Microsoft remains one of the more compelling names in this AI-driven tape. It's deeply integrated into AI through Azure, Copilot, and enterprise software. But unlike some pure-play hardware names, it sits on a diversified, recurring revenue foundation with strong free cash flow and a long history of disciplined capital allocation. After today's move higher, it's not cheap, but relative to some of the more speculative AI stories, Microsoft still offers a combination of growth, quality, and durability that fits well in a long-term core allocation. What to watch next? U.S. markets are closed tomorrow for Thanksgiving, and Friday will be a shortened session with lighter than usual volume. That alone can amplify moves in either direction if any headlines hit while liquidity is thin. First, watch how futures and overseas markets trade while the U.S. is offline. Any surprises on the macro or geopolitical front could show up in futures pricing before the Friday open. Second, keep an eye on early indications of holiday spending, both from in-store traffic and online sales data around Black Friday. Strong numbers would support the recent strength in retail and consumer names. Weak or mixed readings could raise new questions about the resilience of the consumer heading into year-end. And third, pay attention to how tech and AI names trade in Friday's shortened session. After a 4-day winning streak and ECB warnings about valuation, any sign of profit-taking or rotation out of the biggest winners could set the tone for the final stretch of the year. That wraps up Market Close Daily for Wednesday, November 26, 2025. We covered the fourth straight-up day for U.S. stocks, tech's renewed leadership, Robinhood's big prediction markets move, sector rotation, and how central banks and smart money are thinking about AI valuations. Enjoy the Thanksgiving break, manage your risk into the thin holiday trading, and, as always, we'll be here after the bell, before tomorrow.